Our vault
dealer,
expert.
our vault
Yeah.
dealer here. Welcome back to the show.
Thank you, thank you. We look a lot more tired than the last time we spoke. It's been a hell of a 2 weeks.
I can imagine. Okay, so we covered this yesterday. Obviously, the big news beyond market going down is the stream finance illiquidity, the impact, the sort of knock-on effects across the market from that. Obviously, something that had been called out maybe weeks prior and ultimately, unfortunately, came to fruition. And I think it's really brought an increased focus in on where our yield comes from. It seems like we do this every cycle multiple times where we try to ask where the yield's coming from. But also I think there was some more pointed critique of this sort of managed or vault curator model that I know is very core to the platform that you guys are building. I think Stanley coming out yesterday saying, hey, listen, this is the issue. If you're allowing anybody to come in and curate these vaults, people are going to be competing on the yield and maybe not holding the high standard for where that yield is ultimately coming from, and the knock-on effect is not just an impact on that vault or on that platform, but ultimately on DeFi in general. So I'm curious your take here, and would love to get into some of the nuances of how you guys are ensuring that we don't run Stream Finance V2 here with Upshift.
Sure, yeah, absolutely. I mean, the first thing that I will say is you hate to see this happen in the market, and with any player, provider, platform, doesn't matter. We don't want to see it happen. It's not a good user experience for anyone, and it definitely does not reflect on the space more broadly in a good light. And it really hurts the narrative. And then, you know, the rest of us who are doing good work have to go and fix that narrative more broadly. And so, you know, definitely don't want to beat anyone while they're down, and want to be as supportive as possible to the extent we can be. In terms of how we differentiate, it just boils down to transparency, right? And so we think that there is and has to be a segregation of different players and what they do in the space. In traditional finance and really on any other platform, you simply do not have the CIO, who is also the auditor, who is also the lender, all in one place. And this is what happened with Stream Finance. It was a black box model. You couldn't really verify what was happening in the underlying, and then it was used, in the composability flywheel at just an insane degree. And so now we're seeing the unwinds of that happening and all of the areas that it's touching in the space. And unfortunately, it's causing a liquidity crunch. And so the big thing really comes back to, was there transparency? And I think what we always think about in DeFi is, we always talk about the user experience. People want choices, but can everyone really underwrite the risk of some of these assets? When they look and open a vault, are they able to easily underwrite what the underlying yield is representing? And for something like Stream, the answer was no. And to your point, you had to get a number of people on Twitter trying to dig through wallet addresses, trying to track down where the money was flowing. This happened, I think, October 16th or 18th. And it took 2 weeks for that to unfold, for people to say, wait a second, where is this coming from? And what's actually the underlying yield that's driving this?
Yeah, one of the pushback. Sorry, I lost my train of thought. Nice. I had a question lined up and now it's gone.
See, this Josh is
also crazy.
Flashing stuff. I mean, okay, so this. Can you maybe comment on the critique of this sort of curator-based model here generally? We see you, we trust you, but how do we sort of carry that trust through? As in many cases, we might not even know who the sort of curators are here, and then maybe be a little bit more specific about the way that we bring transparency to this, because that can mean a lot of things to a lot of people. And I'm on the website here trying to click through and say, show me the transparency report button, and I still don't see that. So
yeah. So on the curator side, the term curator is very broad, and you can be either a lending curator or a multi-strategy curator. And in our opinion, those things are very different. There are some players who have the capabilities to do both. And from our perspective, there are a lot of people who are maybe better at one versus the other. Some institutions are point and click. Some institutions are algorithmic. Some institutions are systematic. And that isn't always the same. And so you're absolutely right. Basically, the curator model has said, okay, you as a user have to do full due diligence on who these curators are, what are the funds that are backing them, who are some of their LPs, What's their track record? How many years have they been in existence? Doing the due diligence on the CIOs and the traders, making sure they're not anon. And so being able to confirm all of that, will users truly be able to do that and have the time to do that? I think, unfortunately, what we've seen, and this happens in every market cycle, is the answer is no. And so, from our perspective, I think the bigger question here is how much neutrality can you take in terms of what you platform in this space? And from our perspective, I compare this a lot to, for example, Amazon or DoorDash. When you buy food on DoorDash and the order goes wrong, you don't call the restaurant, you call DoorDash. And when you buy something on Amazon and something goes wrong, you don't call the merchant, you call Amazon. And so in your mind, the reputational damage is for the platform that you are utilizing because they platformed that specific underlying merchant. And so we kind of view it in a very similar sense in that, obviously we work in crypto, the smart contracts are immutable, it's publicly on chain, you can track it, but you are platforming and making an editorial decision on what you list and promote, where you put it on your front end and how it exists. And so we do think that you carry some responsibility there and you cannot claim to be credibly neutral. Now, I will say, what I would love to see in DeFi that happens in CeFi is when something happens to a centralized exchange, other exchanges step in and they help and they support and they work together. They do not go on Twitter and kind of air out, whatever their opinions are. And I don't think that's very helpful to the space more broadly. We don't want any of these platforms to go down. We don't want a black swan event to happen. We want to clear out whatever bad debt needs to be cleared out. And then we want to build for a better future. And so I'd like to see that happen. And hopefully we can kind of change the tone and attitude here. But, that's hopefully a change there. And then I can touch on the transparency piece, but I'll take a pause there.
Yeah, I'm curious if you could just put a finer point on, I guess, why what happened with Stream can't happen on Upshift, or like where that would have got caught or stopped specifically.
Yeah. So two main differentiations. When you click into a vault today, you see all of the wallet addresses, and you'll actually see the exact setup in terms of what assets are being held, what's the percent of those assets, and then what platforms. So you as a depositor will not only underwrite the specific asset, but then you'll also underwrite the protocol risk. Now, for example, if someone is now trading in CeFi, we have read-only APIs. These are in closed wall garden accounts that the market maker, for example, cannot disappear with the funds or just run off with $93 million. And so we will actually be able to see the exact asset exposure and size. And so again, the user does have to make the decision based off of that information, but under no circumstance are they able to say, I don't have the transparency into what the underlying consists of. And so you can always say, all right, there's CeFi exposure, this is how much, and these are what assets. There's DeFi exposure, this is how much, and this is what protocols. And so then it's your decision to say, okay, I'm comfortable with these protocols and these assets, therefore I'm comfortable, and the yield, of course, and so I'm comfortable with that. And so obviously there's a lot more that I think the entire space can do around providing more of that information, more of that transparency, and that's what we should work towards. But it's definitely not a black box model, and that has no space and place in DeFi today.
I mean, again, I don't love knocking people when they're down, but the Stream website, I mean, there was, I don't think they had docs. I mean, it is wild to me. And I think that the problem is that these assets get distributed and proliferated across various different other, maybe, other platforms. And so you may have had risk to this in a way that you weren't expecting because, maybe if you went to the StreamFi website, you go, well, listen, this is like your deposit here with zero information, maybe not the risk, level that I want to go participate in, but all of a sudden I'm on Pendle or I'm somewhere else and I'm surprise, or I have that exposure. So, yeah, I mean, I'm always sort of challenged with this idea of, part of making this sort of immutable world of finance, or the invisible world, this thing that we haven't had any design ability in, now legible and designable, is that we're going to have a lot of downside effects from that. I think as anybody who's in crypto, I guess, has come to terms with this. If you've been around for a number of years, I mean, heck, you just can be around for 6 months and you probably start to come to terms with those dynamics. And so I think it's, like any technology, the bad and the good kind of come at the same time. And hopefully over time, we're able to actually build some heuristics here that allow us to make better decisions. I don't know. I mean, again, this kind of seems wild to me that somebody would put money into something like that, and yet, we got $500 million
You'd be
worth of exposure.
surprised. Yeah, and I think the other thing too that needs to happen is, a lot of attention has come into this term recursive lending, and so, by the nature of crypto being as composable as it is, you see lending loops happening over and over again. Now, recursive lending is fine if it's mitigated properly and you understand how many loops are happening and what's the LTV of each loop, right? But going in and recursively lending something, 20 plus times on very, very low LTVs, that's not good for the space. And so, I will say though that this is not unique to crypto. Crypto is more composable. You see a lot more recursive looping happening, but Archegos took down Credit Suisse, right? And that happened in our lifetime. And so, they took down Credit Suisse. Goldman was the first to pull out. A lot of the prime desks were like, oh no. And it was a run on the bank. And the last one standing was Credit Suisse and had to take on that debt. And so, similar things happening here. And I think it just becomes a question of really standards. And the conversations we've had, at least with our partners in the last 2 weeks, is like, okay, what other metrics can we talk about, whether it's recursive lending, whether how much is, equity versus debt. And we do a lot of that. And then also the last thing on Stream is just making sure that there's a separation where, we do a lot of the, for example, calculation in-house, but we're also working with external auditors to make sure that calculation is accurate, right? And, we're not going to have the lending curator lending into the strategy curator at a fixed rate for additional recursive lending, and then, be susceptible to something like this happening where now they have to unwind all of that and take on potentially some level of bad debt. So, making sure that all of these players are separated. I think what happens is people want to cut costs and they can say, all right, well, it's going to be cheaper if it's all in-house. And yes, it might be cheaper, but then you're not losing, this amount of capital. And there's a reason
Cheap
for
is
that
all
separation.
relative.
Exactly. It doesn't look so cheap now.
Interesting. Have you seen an impact of this on Upshift specifically? Is there any exposure here? Has there sort of been a reduction in interest? Is this an opportunity? Like what's sort of the future look like here for you guys?
Yeah. So, lucky for us, we had no exposure. We take risk pretty seriously. We raised the round for the company the week FTX collapsed. We've been through market, I think 3, if you call this a market cycle, 4 market cycles. We take this stuff pretty seriously. And so we're always very, very, very skeptical of the player who goes from, 0 to $1 billion TVL in a month. That always smells fishy, and it typically tends to be. So, we scale in a very strategic way, and we haven't seen that level of impact outside of, asset appreciation and depreciation, obviously given market. And so we take that pretty seriously, but we're always taking feedback on just any additional metrics that our users want to see from us, our curators want to see from us, any of the composability partners want to see from us. But I will be honest, unfortunately, it is going to put a damper on DeFi in terms of people's comfort to take on more leverage. And this all started with, Binance on 1010. We were already seeing a lot of deleveraging happening, but this isn't great. This isn't great for DeFi. People are going to start to unloop. Basis was already not trading, in a great place. So those unlooping, it was happening. So this is a continuation of that. But, the conversations that excite us are the conversations in Web 2. And we were speaking to, and a number of our partners were speaking to Web 2 players about an earned program. And if I'm making that decision and I sit at a Web 2 company and I see this, I start to question whether or not I really want to get involved. And so I think we really need to do a better job of standards, of narrative. I can't believe we're still talking about this. In 2022, we said we would do that too.
I think, unfortunately, yeah.
Hopefully it changes, but I think in a bull market, when everything's up and to the right, people are just chasing yield. I will say right now, if you are comfortable with some of the collateral on these lending platforms, you can earn 30% plus on, just lending against these markets because there is a massive liquidity crunch. But do your own research. This is not trading advice.
High APYs are definitely.
I see that your Meta Vault, I think, launched since we last talked, which is exciting. Simplifies my decision making about using Upshift, so love to see it.
Yes, yes. I think users want, to make less decisions, but they still want to feel like they have the transparency there. And I think going back to concerns around just meta vaults more broadly, we are seeing other streams. This is not the only platform that exists in the space. And so, our warning to other users is let us all grow slower, but be skeptical about what the underlying asset is and make sure that you know what your exposure is to. And, it is really tough. I think we need to do better because it's so composable, because these assets get basketed into different tokens. It is hard to, fully grasp all of the platforms that have some level of exposure to this. And so, I think we can do better there. But a lot of really smart people, much smarter than me, are working on it. And so we're excited for the outcomes of that. Just hope everyone just works together in better partnership.
All right. Well, I appreciate you hopping on fairly last minute to help Josh and I be a little bit smarter about what's happening here. Wish everybody's got exposure well as I think things play out over the next little while. It looks like liquidity is the name of the game in the market. As per usual, seeing the US dollar going up a bunch today. Seems like we got to get this government open. Seems like all these things that we have to be paying attention to, and also now worried about hacks and people losing money, etc. So stay safe out there, folks. I appreciate you hopping on today and diving in with us.
Thank you for having me. Really appreciate it. Bye, guys.